Felix here, and welcome to this live pre-market stream. Winston was sitting on the edge of a seat there if you saw him. And we've got a big day ahead, not just Fed news, but, Winston's news that he sniffed out today. But in all seriousness, I want to walk you through the bad data, and then the good data, and then the opportunities, the secret hidden opportunities, because there are opportunities here. So let me share my screen with you, and I'll show you our outline here for today. So we've got a lot of stuff to cover here. If you're afraid of understanding the market, you better run away right now, because this is going to get deep and bloody and charty and with lots of data. The Mark 7 are down 20%. What the heck does that mean? We are seeing the biggest de-risking I have ever seen in my time as an investor and trader. And the question is, are you making the biggest mistake ever financially? Hardly anybody is bullish. Hedge funds have sold the most in 5 years, and there is a reason this could get a lot worse. But this isn't a doom and gloom stream. This is not one of those channels. Instead, I want to show you the massive bets that insiders in dark pools, the private exchanges you don't normally get access to, what they're doing, and why things could, as I say, get a lot worse. Or, and maybe we should take a green pen here, could they get a lot better? I want to also give you the secret opportunities that I'm seeing in the market right now. If you want to learn what they are, write secret in the chat, and I see that you're alive and well and you want to know. And I promised you yesterday, I promised you I would teach you when to buy stocks. I will fulfill that promise today if you bear with me for a few minutes as we help you better understand the market and do the sort of thing. Like I used to sit in a morning meeting at 7 a.m. in an investment bank. I hated it because it meant I had to get out of at 6 in the morning. And the older, wiser people would walk us through what was happening that day, what was important to understand. And that's basically my mission here, to do that with you pre-market. And then, of course, I try to give you as much educational stuff in between so you actually learn and get better and you don't need me anymore. That's really the ultimate goal here. And that way we'll all be happy. Lots of secrets there. Amazing. And brilliant. The second thing you can, of course, do is smash the like button, which so far only 73 of you have wanted to do, maybe because, things are looking a bit glum. I get that. I understand that. So let's get cracking, shall we? Okay, I'm gonna hit you here with quite a bit of data. And feel free to take screenshots, because that way you'll remember, because I'm going to hit you with more data than you can remember. So also, one of the reasons I like putting this out in the morning, because it makes my thinking more structured. It helps me make better decisions. It helps me make my analysis better. So you are actually doing me a bit of a favor. I'm probably doing this a bit more in depth than I would if I was just doing for myself. So thanks very much there. Ronnie says, Victoria's Secret. Is that what you're thinking about? Are they still around? Are they still open? I thought they were closing. I saw there was a shop here that closed. Skimpy cheap underwear, that's what they make. Okay, the Magnificent 7, or the Lagnificent 7, as they're now known, the Mag 7, so the biggest 7 stocks out there, they have really, really tanked. And we are now at levels that we haven't seen return on capital here since 2022, and previously to that 2018. So they're starting to look cheap, right? So is that a bad thing, or is it just like, oh my God, they're going to keep going lower and lower and lower? People are worried about that because, they're the biggest stocks out there. Now, the lights on Wall Street, the fund managers have literally, they were in December. They were so bullish in December, right? Just after the Trump election, everyone's like, we're going to get lower taxes and there's regulation. And the whole government is basically staffed by hedge fund guys and venture capitalists and our people. That's what Wall Street was thinking. So they were fully invested. And they have just dropped so freaking much in terms of being invested to being out of stocks. The biggest rotation I've ever really seen. I mean, is it bigger than 2001? I think it might be bigger than 2001. I haven't got a proper measuring tool here, but you get the idea. It's a big shift. So we've gone from like hooray to whoops, right? Very, very, very quickly. The sound's still crackling. I actually bought a $35 cable today, and I messed for about 3 hours with the audio settings. All right. weird, but thank you for letting me know, Simon. Some of you guys who are sound engineers gave me some tips as well, and I've been trying to fix this. Hopefully it's a little bit better today, but if not, I shall keep persevering and making it better and better every single day. Now, the weird thing is, you and me, we're called retail, right? That's how the Wall Street looks at us. They look at us as the people they can take advantage of us. And we've been buying the dip at extraordinary levels, and especially in that's the Nasdaq here. This is the Nasdaq, so especially Nasdaq stocks. So are we just buying the falling knife? Are we the exit liquidity for all those fund managers up here who've are selling? Is that what's going on here? I kind of fear it is. So we need to understand this better so we make better decisions going forward rather than being exit liquidity. And then the bearishness out there is extraordinary. Like I haven't seen anything like this when we haven't really had horrible news. Only 19% of the market, the professional market, is bullish. 19%. That means that 81% are not bullish. It's extraordinary, isn't it? We haven't had any majorly bad news. No one's collapsed. No one's died. There's no catastrophe. The housing market hasn't tanked. There hasn't been massive fraud as far as we're aware. So it's like a sound gate filter issue or something, says Weston. Crackled sometimes. Okay, appreciate that, guys. Let me keep letting me know. And Bathurst setting. Yeah, I read about something like that today as well. So we're trying literally $35 poorer today for a USB cable. Can you believe that? You can charge that when you sell an audio USB cable, which is probably just an normal USB cable, but good for them. So what about some more bad news here? Long short funds. Do you know what that means? Long means buy and short means they sell, right? So funds that are selling the market, well, we're at the lowest ratio of buy to sell. So we're basically, everybody is just sell, right? Since pre-2020. Like that was COVID, right? That was COVID. Isn't that crazy? We're in a worse setup right now than in COVID. So this is where we talk about billionaires and cat pregnancies. So we'll get back to that in a moment. She's looking very sweet and a little bit chubbier by the day. So again, do they know something that we don't? Should we therefore be hiding in the basement? Well, let me frighten you a little. We are right now 10% down, basically, minus 10%. Look at all the drawdowns we have. These blue things down there are market dips, right? COVID was 35%, 2008 was 58% down, 2002 was minus 51%, 87 was 36%, the 70s was minus 48%. This could get a lot worse, like a lot worse. This is nothing what we're seeing right now. This is just like a normal little blip. So by frightening you yet, I don't mean to. I want to show you the opportunity, but first you need to understand really what's going on out there. I was looking at dark pool trades this morning. And then you can look those up, by the way, in Trade Vision if you have that kind of inclination. Literally in Trade Vision, we show you all the dark pools for everything that's going on out there, and you can see it literally live as it happens for everything out there. Now, what's a dark pool? It's a private exchange. So if you're a big client, you're going to say to your broker, oh, don't put this one on the stock market, then everybody will see that I'm selling 1 million shares of Tesla. No. Let's do this in private, shall we? That's what dark pools are for, basically to hide data from you and me. But we have the data. So what's going on there? Well, there's some pretty bearish trades here. Like literally at the end of yesterday, here there was someone sold $3.2 million worth of, or bought rather, put options, which is bearish by Tesla. On Carvana, 1.1 million. On MSTR, 1.4 million. And NVIDIA, 1.1 million. These are all bearish trades. And then, of course, a lot on the big indices. But on the big stocks there, they're really, really, really going for it. And that's, again, pretty rare to see. So people are really like turning bearish. Now, there is a little index called Economic Policy Uncertainty Index. I told you this would be sexy. What if they lower interest rates today? They won't. Absolutely no way they're going to do that today. No, they're going to mumble something about market uncertainty, and that'll be as good as it gets today. But they're not going to cut interest rates. It's not going to happen. Now, I put $5 on that. That's as much of a gambler as I am. If you look at how many news articles are talking about we don't know what the economy is going to do, we are right now sort of 2/3 to the top of COVID. I mean, millions of people like just dying out there. You know, are we all locked down? Like, what the heck is going on here? Is this the global financial crisis, one of the biggest mortgage frauds in the history we've ever seen? Is this 9/11 where we think we're under attack? This is none of that. This is just like Trump being Trump, right? So is this an overreaction? And if you think back, do you wish in hindsight that you would have bought at the bottom of the COVID market? Do you wish you would have bought the dip at the very bottom of the market? Let me know. Write dip in the chat if you wish you should have done that in hindsight, right? So should we not be seeing this as an opportunity rather than a horrible risk, at least if we have a little bit of a longer horizon, you know, beyond tomorrow and the way after? George is the first one who wants to buy the dip. Dip. Yeah. Well, then what are you going to buy? What are you going to buy? Well, how do you know what you're going to buy? Well, you have to, and we're going to look at that in a moment. I'll show you some opportunities that I'm seeing, and I'll also show you when I'm going to be buying and what I'll be buying. But if you actually want to learn the rules, like all you guys who wanted to buy the dip, right? How do you know when to buy the dip? If you really want to understand that, you need to understand the patterns that drive the market, which look broadly something like this. And once you understand, how do I know when this is about to happen? How do I know when the dip's going to happen? How do I know when it's going to go back up? And how do I know when it's going to come back down? If you understand that, you can see the pattern. It's like seeing the matrix, like numbers fall into place. And you're like, wow, why is it, how is it that I didn't know this? How is it that nobody explained this to me? That's what I thought. And I was first explained this to me by some lovely bankers. I was like, really? That's it? And they were like, yeah, that's it. I'm like, why doesn't everybody know this? And they're like, well, we don't really want people to know. I'm like, why not? We make a lot of money out of people who don't know what the heck they're doing. We really like it that people just buy stuff at the wrong moments. It's exit liquidity for us. And when we want to buy, they're selling in the wrong time. It's amazing, right? And I was like, it's a bit unethical, isn't it? And they were like, you know, you're in the wrong business, which is why I really probably didn't make a very good banker. So if you want to learn that, learn exactly when these pivot moments happen, because this is what it's about in the pattern. Go to felixprehn.org/get-free. Watch a 15-minute masterclass. That's it. Like, leave this video right now. Leave this video. Like, very few people on YouTube tell you to leave the video. Go and learn. It's far more important than understanding today's news and what Papa Powell is going to say and so on. It's that you master your skills. If you're going to learn the skills, and go to felixprehn.org/get-free right now or at the end of this video. Write skills in the chat, and then I know you're actually going to do it. Skills with a Z. Now, okay, let's unfrighten you here for the moment, right? Foxter, my friend, thanks for putting the link in there as well. Now, to unfrighten you, I wanted to show you this. The market has a drawdown every single year. That drawdown is the red column here. So 2007, we went down 10%. 2008, we went down 48%. Whoops. 2009, we went down 27%. 10, 60%. 19, 10%, 5%, 7%, 12%. You get the idea? Every single year. Last year, we dropped 8.5% at one point. 2023, we got 10%. 2022, we dropped 25%. And then look at the next column, where we ended in the end of the year. And almost every freaking time we actually end the year green. You see my point? Drawdowns of 10% are, and you might want to write this down, they are normal, right? Skills and skulls there. Okay, guys, love you writing that there. Done, skills, feeling enlightened. Brilliant, Neil. Fantastic. So 10% drawdowns are normal. And so we are right now, 10% down. Right. Bigger than 10%, well, the average drawdown is actually 13.6%. And on average, we went up almost 12% over the last 74 years. People also don't realize that. People always think the market goes up like 8%. No, it actually goes up 11.6% on average if you are simply buying the index. No. Extraordinary, isn't it? So what we're seeing right now is completely normal. Nothing really to write home about, even though everyone's freaking the heck out. Let me show you some opportunities here. And you're like, no, not PayPal, Felix, put the chart away. And I get that. It doesn't feel very good, right? But let me show you one thing here. PayPal right now is buying back. So they're buying back their own shares at a rate of almost 10% a year. So every year, there are 10% less shares out there. So if you own PayPal, you will end up owning 10% more every single year. Like just pure maths. It's like deflation, basically. They're just shredding shares, which is insane, right? And the stock is, no one's liking it. It's really weird. It's really weird. We need so much money. We're just going to keep doing this. Eventually, there'll be no shares left, except for one share that Winston will own. Or look at Tesla right now, right? Absolutely loathed, torched, blown up. They just got excluded from the Vancouver car show. That's obviously the death knell for any car company, because the Vancouver car show is clearly the most important thing in the world. I didn't know there was a Vancouver car show. I doubt anybody else out of Vancouver knew there was a Vancouver car show. But yes, they're excluding Tesla on the premise that they want to keep their visitors safe. And they think having Tesla there would cause a riot, which is interesting. But yeah, so Tesla is down how much? It's down 53% right now from its highs. And that never happens, except it happened twice in 2024. It happened in 2023, it happened in 2022, it happened in 2020, it happened in 2019, it happened in 2016. So it's not exactly rare, it's just welcome to being a Tesla shareholder. Where are those opportunities? Do you wish you would have bought the Tesla dip in, say, bottom of 2023? Shall I open it up for you? Bottom of 2023, you would have bought at $105. So right now you would be up, be up 120%. To the top, if you knew where to sell, you'd be up 350%. Would that have been terrible? All right, you got to ask yourself that. Those what I see. I see a fundamental opportunities. Companies that are executing well, that have a great product, that have a huge market share, that are putting out good stuff, very, very competent management, and are just absolutely being hammered by this bizarre market. You want to get an optimist, Nicholas, you want to get some militant optimists out there. Yeah, that'd be good for branding, wouldn't it? Optimus beats up, democratic nutters. Yes. Good idea, perhaps. Now, screenshot from Alex's X feed here. And he does a very good job covering NVIDIA. Probably better than anybody else out there. And Jensen Huang gave a speech yesterday, which was pretty extraordinary, and making a video just coming later today on like everything that's going on out there and how we position it. And NVIDIA, of course, is one of the key things here. And what NVIDIA's CEO said, he said that there is a trillion with a T dollar opportunity in robotics. So in robots. And who are the companies that are going to be great in this sector? Well, yeah, NVIDIA, they're sort of the shovel, right? Every robot is going to have some sort of chip in them, and a lot of them will be made by NVIDIA. I would say Tesla, because they've actually got something that works. I think Amazon, for less sexy robots, they have the most robots in the world, something like 750,000. I mean, most of them are just little sort of wheeled things that carry boxes around. But again, got a huge set of warehouses. And then, of course, there are a bunch of others. But to me, these are like the primary beneficiaries of robotics. And again, look at the stocks, right? Yeah, absolutely beaten up. I mean, look at NVDA here. It's up a little bit pre-market. Where did my chart go? There it is. Up a little bit, but dropped yesterday, which kind of makes no sense. And again, it's down from top of the market, if I may. It's down about 23% here, right? Which is kind of crazy. Tesla is down from the very top of the market here to where we are right now, 52%. So these massive, massive sell-offs just because people are feeling a bit emotional about politics, which is a bit weird, really. What about just the market overall? What about the market overall? Ruben, thanks for writing skills. You're doing an NVIDIA video. I've sort of done a video today on kind of like, I think, everything that matters rather than just purely on NVIDIA. So it'll come out a little bit later today. If you want to see that, guys, smash the like button. That would be a good thing to do. So if you look at the Magnificent Seven right now in that ochre color there, or, shit color, that has absolutely collapsed it. We're now at a valuation of about 27 times PE. Now, PE ratios are not hugely useful, but it gives you a little bit of an indication. So we're kind of close to where we were in 2022 or where we were in 2020. Yeah, 2020, COVID, right? We're kind of at similar valuations and 2019. And if you think about this, have these companies become better in the last 5 years? Yes or no? Do they have a better business? Do they have more profitable? Do they have higher margins? Do they have a larger customer base? Yes or no? Right. So it's kind of weird that these valuations come in like that. And then the actual Mag 7 here, so the rest of the S&P, so excluding the Mag 7, is now trading at about a 20 times P, which is not quite, COVID really hit the market really hard. It's kind of where we were post-COVID and pre-COVID, literally pre-COVID. So it's kind of as if all of these companies have not gotten better in the last years. So for a long-term investor, I think this could be an opportunity. So how am I playing that? Matt there, yeah, funny. How am I playing that? I'm simply buying the S&P. So I'm buying an ETF. I think it's called SP. Is it SPGL? Is that it? SPGL. Is that what's that ETF called? SPGL ETF. Yeah, that's it. And the reason for that is that it has insanely low fees. The fees are 0.02%, which is pretty good, right? So you put in $1,000 and you pay, I think, 20 cents. Am I getting that right? You pay 20 cents a year in fees. I put in a little bit more than $1,000, but you get the idea. Just being in the cheapest fund possible kind of makes sense. So why am I not buying individual stocks? Because there's still a lot of warning signs flashing. And one of them is the good old fear indicator, VIX, which is trading at 2160 right now. We want to be below 20 to kind of be like, this is okay. We've got tariff announcement on the 2nd of April from the president, the orange one. And there's just 1,000 things going on in the market right now that gives us uncertainty. And therefore, I think it's possible that individual stocks might drop a lot lower. But if you look at let's look at SPY, which is the same sort of thing. So SPY is an ETF of the S&P 500, which I use for trading because it's very, very liquid. But I wouldn't own it in the long run because it's an expensive thing to own. So what I do is I put in here a 200-day moving average line. And this only works, in my opinion, for indices. This does not work for stocks because stocks can drop a lot. So when were we below those levels? Here, right? So down there. Let me draw a few more of these. Say down here. Can we get a box? Interesting. That one down there. And you get the idea, right? So the idea basically being that you are just buying it at a historically cheap moment because it's fairly rare that we are below the 200-day for a long period of time. Now, can you be down there for a while? Yeah, say 2022. From February, we were down there for like a whole year. So is that terrible? Well, not if you have like a multi-year time horizon, 10 years or something. Then you can just buy every single month as you go down here and you're in that zone and you're getting the index kind of on the cheap. So your average price is 300, 400. Right now we're trading at 550. You're still pretty happy. SPGI or SPGL? Question. SPLG, I think. I think that's the SPLG. Yeah. I think that's it. It's just the ETF with the lowest fees that I could find. I'm sure there are others that probably have similar fees, but can we open that? Yeah, there we go. It's exactly the same chart, right? It just has very, 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 very low fees, which is all I care about with an ETF. Just buy the cheapest fees. That's really all that matters. So would you buy SPY leaps? Not really. Not really. I'm not really I tell you why not, because they're expensive right now. So options pricing is largely related to the little thing called IV percentile. It is at 95. It goes 0 to 100. So you're really overpaying for this. You want to buy them when they're cheap, not when they're expensive. So therefore, I don't think it really makes a lot of sense. That's the way I would look at that. Now, let me give you some other good news here, because there's more good news. US industrial production is at its highest level. Doesn't sound like a recession, does it? What are people buying? Durable goods, mostly, like machinery, cars, that sort of thing. So that's kind of weird, right? So there is something going on there. Actually, industrials are quite bullish. And if you put all that together, I'd say this is a glorious opportunity for well-informed, disciplined, well-trained investors to buy good stuff cheaper. But if you really want to understand when to buy the individual stocks, the sexy stuff, the Teslas, the Nvidias, the SoFis, all that stuff, just before it breaks out, rather than buying the falling knife, because a lot of these things are still falling knives, right? Like I've been labeling this one a falling knife for about 6 months now. AMD, for example, keeps going lower, right? What's the point in buying something at 150 when it's going to go to 100, right? We really want to avoid that. And this could go a lot lower. Like it's entirely possible. So how do we deal with that? Well, what we really want to do is, in my humble opinion, which is something that I've learned from some very, very smart investors, which is we buy when we get what I would call a breakout. Maybe we look at a Tesla chart here, because that's a little bit more volatile. That gives us some nice little elements there. So what we want is we want to move, and there's a little bit of education there. If you want to get the full story, watch the masterclass down below at felixprehn.org/get-free. What we want is we want to be, I'll zoom in a little bit here on a nice example, right? So do you remember 2024? Big first half, it was like, oh no, Tesla is collapsing. Tesla was up here at $260. It went all the way down to 130. And I would not say buy the dip on the way down, because this looks bad. And then we got that recovery here on earnings. And it wasn't just a recovery. We broke through the 50-day moving average line, but I still wasn't buying. Why not? Because we're still sloping down on that 50-day moving average line. And this line is really something that every major investor and trader out there looks at. And then we did a little bit of this sort of consolidation thing. And that's a good thing. That's usually like what we need, a bit of sideways action before we go higher. And then when we finally went higher, there was explosive volume down there. Now, what does that tell you? It tells you that the institutions, Wall Street is buying it. And that drove us massively higher, like massive breakout, right? Now, you might be thinking, yeah, Felix, but that was a false breakout, because after that we went down again. Well, that's not how this works. How it works is that you buy here, right? That's where you buy. And then you set yourself some nice little risk management, which means you draw a little line as this thing goes up in a straight line. You draw a little trend line up here. And then that trend line tells you, get the heck out. When we go up, when we're here and volume really spikes on that drop, that's when you get out. And even if you missed that, well, there was a massive gap down here, which means you still would have made some money. Not as much as you'd like, but you could have gone from here, sell up there. And if you think, oh, he can only do this in hindsight, fair enough. I used to think that too. I used to think charts were a little nonsense. I just didn't get it. I just didn't think it could be that simple. But once you have been taught the rules, and I'm not going to spend 15 minutes explaining every little detail here, because I've recorded a video for that at felixprehn.org/get-free, and that way you can watch it again and again, and you can take notes and screenshots and so on. But you will start to see this pattern again and again and again and again. And then what you're going to realize is that in the emotion of the moment, you still don't sell. And then you're thinking, I should have sold. Why the frick didn't I sell? And then you start to realize that you need to set up automations because your mind plays tricks on you. And that's really when you get into a place where magic happens. You get so much better as an investor. And maybe you're thinking, oh, I'm not a trader, I'm an investor. It's the same thing, my friend. Your goal is to make as much money as possible from your money with as little effort as possible and as little risk as possible, right? So would it be better as an investor to sell up here or up here? When Tesla was trading at, $480 or something like that, whereas right now you're 231. Would you feel better if you'd sold? Yeah, you would. And you'd have all that cash and you'd be like, I'm going to buy a dip because I've got cash. Whereas right now, a lot of people don't have cash because they're hodling, right? So that's really what it's all about. Would you buy a leveraged S&P? No, never. Leveraged ETFs are the devil's work. I'm not particularly religious, but yes, terrible things. Ask an LLM why they're terrible, and it'll explain it to you. And that'll make sense. Scott, thanks for the ding-dings there. Vitas is asking me in German, will I still sell wine? Yes, I do. I have a wine business. I have a bunch of businesses. And Scott, appreciate you, my friend. I know you know this in a lot more detail than we're kind of going through here. But let me show you something funny before we look at the life market here. If you think your life is complicated, if you think things are not looking too bright, look at this chap here. UBS client says his wife moved in with their wealth advisor, his financial advisor. Isn't that funny? Maybe not. He doesn't think it's funny, does he? He really doesn't think it's funny. But apparently that happens quite frequently, that the wife makes off with your financial advisor. So be careful of handsome financial advisors particularly. But let's have a look at we'll have a quick look at the heat map, and then we have a look at the top stocks out there. Is this already pre-market? This was pre-market just before the market opened. Pretty decent, right? Now, small moves up, not big moves up, you'll notice. Tesla 2.7% up after 53% down isn't really a big move. So what's going on here today? Well, I think a lot of the market is still very, very, very cautious on what the Fed's going to do today. So Tesla here, I mean, the teeny tiniest of jumps up there, not exactly anything to talk about. NVIDIA, despite announcing a chip that's 40 times faster than the last lot, basically down from yesterday. I mean, it's up 2% pre-market, but it dropped quite a bit yesterday, obviously. What about some of our other favorite stocks out there? SoFi, very, very interest rate sensitive. So watch out for what Jerome, the Magnificent Powell, is going to say today. Up a percentage point, not exactly a lot. Say Palantir. Simon, can you tell us next time we're at all-time highs, tell us to sell? You will never know the top of the market, Simon. And you can laugh, and that's okay. I used to laugh at this. I used to be just like you. I used to make fun of people who looked at the charts. But once you actually give yourself the chance to learn and understand it, because rejecting it is easy, right? Rejecting is saying, oh, no, this is just nonsense. This, the fact that my portfolio is down however much isn't my fault. It's just the way it works. I'm doing the best I can. I don't need to focus on this. I just need to go to work for 8 hours or 10 hours a day, spend about a third of my life and about 70% of my waking life working to bring money in. But the money I bring in, I don't need to give that any attention. That's not important. That's the mindset we've been taught, right? But once you kind of think that through and you think about who benefits from that, and it is you, you give yourself the chance to actually look into these things that I haven't made up. I've learned this. Now, I'll be the first to say this. I'm not a particularly, bright. I'm not a investing genius in any way, shape, or form. I've just been taught the rules that people figured out like 40 years before me. Right? And once you understand the rules, and once you take them seriously, and talk to all the guys who are in our community and who are learning from us and who are learning from my mentors, and how it's changing what they're doing, right? And how it's allowing them to get out in better positions. You see how this works. Like, look at the Palantir here, right? Was I telling you to buy Palantir at the top? Nope. Well, there was a breakout here. Yeah, that was good, right? That was still positive. You draw you draw a little line, and it looks silly, but that little line, which connects one point lows, 3 lows, actually 4 lows, that's your trend. What happens when you drop below the trend? Well, you have a look what happens at volume. The volume doubled. What does that tell you? Institutions are selling. What happens the next day? You get a gap at the market open. That tells you bad things are happening, right? And you then got a little bit of a relief rally here, which is pretty much always what happens. And then you got another, looks like a little mini gap down, right? What happens next? You start to break below the 50-day moving average line, right? And you sort of zigzag sideways. So right now you're in a moment of weakness where buying this is not a good idea. I didn't make that up. People made that up before me, rather discovered it by trading for a long period of time and making a lot more money. But the real early warning sign was up here. So if you want to maximize your gains and benefit from the breakouts, you need to understand risk management. And if you understand that, oh boy, things improve and change and become fun, and you're no longer worried about your portfolio because you know what you're doing. So if you want to learn that, I give it away for free. That's all I can do. Right? So let me know if you want to come and learn it. Right, learn down below in the chat. My golden Brody says hi to Winston. Yeah, he's down here, actually. He's sleeping. Winston, do you want to say hi? Winston, come on. Come on up. Come on up. Come on. Oh, he's doing his most pathetic little I'm tired face. He doesn't want to get up. Winston. There we go. Come on over here. Can you guys see him? You can't see him, can you? He just played outside. There he is. Can you see that? See that face? He's like, why are you making me get up? I was very comfortable. There we go. So, learn, says Adriana and Mike. Thanks, guys. So be brave who want to learn. Learn, live it, learn it. Exactly. He's going back down there. Yeah. Say hi to Winston. So, okay, cool. So that's what we're looking at. Now, of course, the other thing today is the Fed meeting. And that's going to be important. Now, we're not going to get a rate cut. Definitely not. It's not happening. What we are going to get is a press conference and a statement and a dot plot. So they're going to tell us where they think rates are going to go. So the dot plot is helpful because it tells us, do they think rates are going to go down faster or maybe lower than previously thought? I don't think there'll be a lot of change. The Fed is pretty conservative in this particular moment and stubborn. It's too late. But I think they are going to say that there is more uncertainty around the economy. And that statement in itself wasn't in there last time around. And therefore, it'll give us an indication that interest rate cuts are coming a little bit closer. And that's kind of all we need. If we get that, I think we'd be quite happy today. My friend, you think it's the Wi-Fi? Yeah, actually, I have the Wi-Fi company coming tomorrow to reset something here, apparently. So we'll also see if that fixes it. But appreciate the feedback on the audio side. Jay, you want to learn? Well, there's a link down below, my friend. Go start there. That's a good place. And Nari, my pleasure. How's Meta looking today? We're gonna have a look at that. Learn. Okay, let's have a quick look at headline news as well. You know, it might need a new mic. No, the mic's actually fine. I tested it. It's something weird. I changed the cable today as well. It's audio is a funky thing. There's loads of stuff that can be interference and stuff. It's a weird thing. Right, what we got here, Zelensky says he'll talk to Trump after Putin's phone call. So some progress. Turkey, we don't really care. Zuckerberg, we don't really care. This is quite funny in a way, although he looks pretty pissed off. A lot, right? Bloomberg's crap nowadays. I'm thinking about canceling my Bloomberg subscription. It's mostly politics now, which is pretty weird. You need to change the buffer. What does that mean, my friend? I don't know what that means. Explain it to me and I'll do it. So the sound is fine in Gibraltar. That's good, my friend. No, our stream bit rate is a little bit too low, which is a bit weird. We should be using a higher stream rate, which is our intention. I don't really know why. I don't know why it's doing that. We will try and fix it. I'll take a screenshot and I'll talk to Grok about it later. So yeah, we can improve obviously these live streams and go back to the lovely quality that we've become accustomed to. I thank the 2,200 of you who are live, especially those of you who've smashed the like button. You've been talking about canceling a subscription forever. I know, I've been a Bloomberg subscriber for a long time. It's sort of weird. It's kind of where I used to get good news from, but now, yeah, it's weird. It's a weird place. Doomberg. But you're quite right, Alec. I've been procrastinating on that one. Mark saying pension fund quarterly rebalance, is that not mandatory? It depends on the fund. Like funds have rules. A lot of them have to sell. Therefore, they will rebalance. At present, you can see some of the trades coming in here. That's, live, like literally a minute ago. You're seeing much bullishness out there. Right? It's all puts. It's all hedging. I mean, it's kind of normal to hedge pre a market here. But look at these Tesla hedges here, 5 million, 9 million. Can you see how big they are from yesterday? But yeah, this morning is not looking particularly bullish. What were we talking about? Rebalancing. Yeah, Goldman Sachs at the moment estimates about $35 billion of pension fund buying at the end of the quarter. So towards the end of the month, we see exactly how big that comes in. Walter, Magic Moon, and Nicholas, there. Thanks for the smash and the likes and all that kind of stuff. Is there a less political Bloomberg alternative? We're building one. That's literally what we're working on. At the moment, what we just started to do is for every major stock, we now have like a proper analysis in here. Of news, but also analysis. We give you the key drivers. So that's kind of the start of what we're building out. And then we're working on like basically a news page for like the major stories. And then the goal is for you to be able to say, hey, these are the stocks I own, maybe based on your watch list or based on the portfolio you've imported into TradeVision. And then you'll be able to see the news you actually care about. That's kind of my goal there. So that's coming out shortly. We're working on that. And you guys who already subscribed will get that for free because we like to grandfather things for existing users. We still have users from a year ago who are like gotten everything we've done basically for free, which is very, very cool. So if you want to sign up to TradeVision, it takes you to this page here and you just say get started for free because you can get a free trial. It's risk-free and you get a ton of cool stuff. Our indicators, you can track your portfolio. You can import from these brokers, keep adding more as well. This works whether you're a trader or an investor. We give you alerts daily by email as well of like what's going, what's good, what's looking not so good, and plenty more in there. So check that out. Analysis without paralysis, exactly. That's the goal, and just to take the political bias bollocks out of it because we don't care, right? We just want to know what's actually happening there. When does the old man speak? If you're referring to the chairman, the almighty, the anointed one, Jerome Powell, he speaks at, let me see. Interest rate decision is at 6, press conference is at 6. This is my time, right? Huh. Can we change the time zone on here? Interesting. Yeah, I chose it in my time zone. Does it? No, it doesn't. What time is that? Interesting. Very interesting. I thought it was 2 o'clock or 1:30. Interesting. Okay, I'll have a chat with the developers to see what the heck's going on here. Why have we got this is UTC. Okay, that's London time. That's helpful. Universal time. We should display that in New York time, shouldn't we? Wouldn't that be more useful? You can use local time. At least that way I know when it is. And there's Jerome calling me. It's at 3:30. No, this makes no sense. This makes no sense. We'll fix that. I'll take a screenshot of that. That's the beauty of building your own software. Funky little things break. 12:30 Central Time, USA. Thanks very much, Shane. There, I appreciate that. When is TradeVision coming to mobile? Very, 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 very shortly. I've literally saw it with 15th iteration of the mobile app today. So we're very, very close to releasing that. Would it be better if it's the same time as the markets are open? Yeah, I think it should really be Eastern time. I think, Scott, I think you're completely right there. That would make sense. Most software uses UTC. Yeah, but I mean, UTC it's Greenwich Mean Time, right? It's like woke Greenwich Mean Time, Universal Standard Time. Righty ho, my friends. Any questions? Anything you want to know? 2 o'clock, says Monica. Appreciate that, Monica. Yeah, overall, how are we looking overall? Let's have a look at the heat map again here for the day. Flattish, I'd say, this morning. A little bit of a Tesla bounce, but not much considering the pain and horror that Tesla has endured of late. So overall, the market's sitting on the edge of the seat, and you can see the hedging flows happening here. Everyone's buying put options. That's quite normal, by the way, pre-S&P meetings. It's just what the big funds do. They're putting a lot of money into just hedging the worst case. Now, they will then close these positions afterwards, which tends to drive the market up, unless Jerome does something and says something horrible. Carl, I appreciate you too, my friend. Thanks for tuning in. How near are you integrating TV with brokers? Neil, in all honesty, not that near, because the brokers are very, very, very slow. We have a guy who's done this before, so we know exactly what to do, but every single broker needs to give you an individual API permission. It's just like mind-boggling how slow these guys are. But we'll get it done. We'll get it done sooner or later. Lisa says, as a member, I'd recommend joining us. Love you for that, Lisa. I'm glad you're getting good value from us and good education, and I love that you're putting in the effort to actually become a great investor. Take responsibility for your money, right? Most people just don't. They just say, "Oh, the market will fix it. I'm a victim of the economy or something." No, you're not. You can do amazingly well in all economies. So. The Don says Trade Vision is $19.99 a month. Yeah, so it's that a month. If you subscribe for the year, my friend, it's $16 a month. It depends on whether you want to subscribe for the month or for the year, but there's a free trial as well, so you can check that out down below. Thanks very much, Dave. I think 2 or 2:30. I think you're right, Dave. I think it's 2:30 Eastern time that Jerome Powell speaks today. The brokers don't want you to show us the truth. I think brokers don't want you to see your past errors because it might put you off investing. If you close a trade in your broker and it just disappears, right? You don't ever see it again. Our software changes that because it's really important to analyze and learn from your mistakes and your winners. And they don't really allow that. So we're making that happen. What does strike price mean in the dark pool? That's the options. Basically, the option that they selected. Dark pools are mostly option trades. Most of the Wall Street is actually option trades. Ellis, I've been using Trade Vision almost a week. I love it. I appreciate that, my friend. I'm glad you're getting good value out of that. Phone app's coming very shortly, my friend. And I love you for watching. I love you guys for tuning in. Bonus morning meeting with Felix, exactly. And yeah, I love you guys for tuning in. Winston and I are going to retire for the rest of the day. And actually, I have a meeting. I never have meetings. I have a meeting today. My first meeting this week. I don't do meetings. I hate meetings. Who else hates meetings? It's just a waste of time usually, but sometimes they're useful if you talk to like 2-3 really smart people, but I don't really do meetings. It's one of the wonderful things of not having to be in a corporate environment. It's like that waste of lifetime thing. So enjoy today. It could be interesting. I think it's going to get potentially more choppy. Options expiration coming up. The tariff announcement on the 2nd. So I'd be a little bit cautious. I think buying the index, if you have a long-term horizon and you have a good stomach lining, is a good move. That's just my humble opinion. Let me know what you guys are going to do. And above all, please just learn. Like, just use the pain you're feeling right now. If you're feeling pain, to motivate yourself to get better and learn and do better from last time. Thanks for tuning in, and I hope to see you live tomorrow.